There's three types of investors in Bitcoin. There's the traders, there's the technocrats, and there's the maximalists. The maximalists are buying the stuff to give to their grandchildren, and they just dollar cost average in, and they're all in already. So they don't control the market. The technocrats think it's the next big tech network like Google or Facebook. When they're feeling bullish on technology, they're buying. When they're feeling bearish on technology, they're selling. The traders think it's either a correlated asset or an uncorrelated asset, the risk assets, depending on their mood. Right now, they think it's correlated to risk, and so if they're selling risk, they're selling Bitcoin. It's obviously not a tech stock. It is actually the ultimate risk-off asset. In time, over the course of 4, 5, 6, 7 years, everybody figures it out. But right now, the traders and the technocrats control the market trading of Bitcoin, and it's a function of the tug of war between them and the mood in the market.
Hello and welcome to Money Talks. In today's video, MicroStrategy CEO and Bitcoin bull Michael Saylor talks about MicroStrategy's plans to offer its employees access to Bitcoin retirement plans through Fidelity's new Bitcoin 401k service. Fidelity is one of the largest 401k providers, working with 23,000 corporations. The move is a further signal of the legitimization of Bitcoin, although with the crypto's wild price swings, it's hardly a safe bet for the faint of heart. Additionally, MicroStrategy is best known in the crypto sphere for its aggressive Bitcoin acquisition strategy. Earlier this month, the company purchased 4,157 Bitcoin for about $190.5 million, bringing its total trove of holdings to 129,218 Bitcoins, or $5.1 billion. Let's hear what Michael Saylor plans to do with this latest venture.
Well, look, Bitcoin's digital property, and that makes it the perfect asset for a retirement plan. It's less risky than bonds, than stocks, than commercial real estate, than gold. It was kind of built for this. Most people buying Bitcoin, they want to give it to their grandchildren or their great-grandchildren. So I think Fidelity's put their finger on an issue. There's 80 million Americans that currently own or have owned digital assets. 30% of institutions want to own these digital assets. 401k plan is a pretty common thing for millions and millions of workers to use to save in order to protect their family interest. And this is going to fill an important vacuum in the investment product market.
Michael Saylor said that employees at the enterprise software firm MicroStrategy will be able to add Bitcoin to their retirement accounts through Fidelity Investments, which recently became the first major retirement plan provider set to offer the cryptocurrency as a savings vehicle. Saylor declared that Bitcoin is a digital property, and that makes it the perfect asset for a retirement plan. It's less risky than bonds and stocks and commercial real estate and gold. In fact, a 401k plan is a pretty common thing for millions and millions of workers to use to save in order to protect their family's interest. This is going to fill an important vacuum in the investment product market.
Yeah, there's been a lot of demand for this. They've been asking for it for quite a while. And so it's a technical challenge to offer 401k savings plans, and Fidelity has overcome that challenge in offering a great product. So we're really delighted to be able to offer it to our employees.
Fidelity will also include Bitcoin investment into retirement accounts later this year. Customers will be able to put up 20% of their savings into Bitcoin, with other cryptocurrencies likely to be added later.
You know, there's a lot of fear and uncertainty around electricity, automobiles, airplanes, and the like when those technologies arrived. Bitcoin's a digital transformation of property, of capital, of energy. It's like money at the speed of light on an open protocol. It's going to require a lot of education, and I think that as regulators and the society at large gets more educated, they'll get more comfortable that this is a much better way to do this than the 20th century technique.
As we have explained previously, Fidelity, the largest retirement plan provider in the United States, announced plans to offer Bitcoin in 401k retirement accounts to its account holders later this year. The company is set to allow investors to allocate up to 20% of their 401k accounts to Bitcoin, though employers will have the ability to lower that cap. The Boston-based asset manager, which administers plans covering more than 20 million participants, representing $2.7 trillion in assets, said the launch is expected to take place by mid-year, debuting at Bitcoin supporter Michael Saylor's firm MicroStrategy, which holds billions of dollars of the asset on its balance sheet. The offering, which Fidelity is calling its digital assets account, will hold Bitcoin and short-term money market investments to provide the liquidity investors would need to engage in daily transactions if they chose to do so. The currency will be held in custody with Fidelity Digital Assets to ensure institutional-grade security, the company said. The agency cited crypto's historical volatility, potentially inflated valuation, and fears about custodial issues given the near impossibility of recovering funds from a wallet if one were to forget their password. While the offering will launch with Bitcoin as its only asset, Fidelity plans to cover other cryptocurrencies in the future. The company has been at the forefront of its peers in its digital asset offerings, launching a custodial service for institutional investors in 2018 and creating a Bitcoin fund for accredited private wealth clients in 2020. While there may have been cheering throughout #CryptoTwitter that Fidelity is letting clients dip their toes in Bitcoin, the government may not be as happy. For starters, federal regulators have been very reticent at letting investors get easy exposure to the crypto spot markets, even Bitcoin. Famously, the Security and Exchange Commission is yet to approve a Bitcoin spot ETF. It has approved a handful of products that offer exposure to Bitcoin futures contracts, often citing the market's vulnerability to fraud and manipulation. When it comes to retirement planning, volatility again comes into play. Bitcoin is down nearly 40% from its all-time high of just under 70,000 last November. And retirees and those soon to retire may not have the funds or time to ride out these boom and bust cycles. In fact, last month the Department of Labor issued a notice expressing several concerns with investing retirement funds in crypto. Chief among them were the market's extreme volatility, its emerging and cloudy regulatory status, the inability of investors to make informed decisions, as well as more basic concerns about security of holding crypto assets, which have become juicy targets for hackers. Labor's concerns matter because it has a say in the regulation of employer-sponsored plans. While Fidelity is a world unto itself when it comes to asset management and retirement savings, there are other ways to get your retirement savings access to crypto. Firms such as Kingdom Trust, iTrust Capital, and Bitcoin IRA let investors purchase digital assets via exchanges and hold them in individual retirement accounts. Additionally, Coinbase partnered with ForAsol in June to let participants in employer-sponsored plans purchase dozens of crypto assets and hold them in tax-deferred programs. Finally, if you want exposure in the industry but don't want to directly hold digital assets, there are plenty of stocks and ETFs that track companies operating in the crypto industry that are highly correlated to the underlying assets. Let us conclude this by saying that saving for retirement is a personal decision. From what to hold to allocation percentages must depend on your specific circumstances. Therefore, you should seek out a registered investment advisor or other professional advice before making any big decisions. So, do you think Bitcoin is a perfect asset for retirement plans? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.